Trying to choose the best investment funds is an absolute nightmare. I know when I first started many years ago that I had no idea what I was doing, and I looked at all the names and looked at all the acronyms and thought, my God, where the hell do you start? All these confusing names, you've got dividends, accumulation, different classes of funds, you've got all the different fund managers, you've got all the different places around the world, Class A, Class C, the list goes on. Now I don't think I can single-handedly change the investment world overnight and asking them to make their funds a little bit more simpler. Hopefully in this video I can take you through some of the most popular funds on the Hargreaves Lansdown platform and then give you a few pointers about what you should look out for and maybe look at some funds which you could invest in if it's right for you. Personally, I've had an account with Hargreaves Lansdown for many years. I've got both my self-invested pension plan with them, I've got a stocks and shares ISA, and I do have a general investment account too, and it was one of the first things that kind of got me invested after a friend recommended it to me, and I've kind of gone from there over the years. In case you hadn't heard of them, they're a publicly listed company here in the UK, worth nearly £7 billion, and they've been around since the 1980s. So even if you don't want to choose one of their own funds, you can just go and invest in them in the company anyway. So in this video, I'm going to look at 4 different popular funds from the website, and these are all funds which Hargreaves Lansdown say are some of their most popular purchased funds on their platform, and that's across all of their different investment accounts. So hopefully some people out there know what they're doing. Let's see what other people are buying. So what I'll do, I'll run through each fund at a really high level. I'll look at some of the fees and charges. I'll look at some of the past performance, especially against the S&P 500. I'll use this as like our benchmark. I'll see maybe what's inside the fund, talk about whether it pays out dividends, talk about whether it's an accumulation fund, for example, and hopefully this can act as a kind of a guide and the way that I start looking at investing and the way that I would analyse a fund, but please make sure you do plenty of your own research. Most of the funds today will be actively managed, but there will be one passively managed fund on there, and as a quick reminder, remember those fund managers will essentially be picking stocks for us with inside that fund to try and beat the market. So rather than weight their stocks depending on how big the company is, they'll weight their stocks depending on how much growth they think there is and how much potential there is for future growth. But remember, as I just said, please do plenty of your own research. I'm not a professional financial advisor, and even if I was, I couldn't give you financial advice anyway. But with that said, let's get straight into the video and jump into our first fund. So I'm going to jump into the laptop now and let's have a look. Right, so first fund on the list is the Baillie Gifford American Class B Accumulation Fund. Now, the first bit, of course, it's Baillie Gifford. That's the individuals who are actually managing the fund, so it's named after them. And of course, American Class B accumulation just means that it's mainly based in the American market, and accumulation means that rather than pay you dividends, any earnings from the fund is reinvested back into it. On Hargreaves Lansdown, this little star, of course, means it meets their wealth shortlist too. So kind of one of their most favourite ones amongst all of their customers, and one they recommend to a lot of their customers too. So let's have a look at a high level just so we understand what we're looking at when we look at different funds. So one of the first things I would do is just go over to looking at the charges and savings section, because I want to know how much it's going to cost me as an individual investor to invest in this fund. And full disclosure, I do have a bit of money in this fund because I got swept up in all the excitement because it's been doing pretty well over the last few years, to be honest. So there's nothing to get into the fund, which is always nice to see. 0 charges here from the platform to do that. However, ongoing costs, there are definitely some ongoing costs. So before we get excited and look at all those blue numbers on the right, we do need to work out how much our ongoing charges are. So we can see this fund here is a net ongoing charge of 0.31% annually. So not too bad. It's certainly not a low cost passive index fund because it is a managed fund. So do expect to pay some money for that. But actually that's quite a hefty savings charge apparently from the Hargreaves Lansdown platform. As we can see here with the 0.2%. So 0.31, it's by no means the most expensive fund you'll ever see, by no means the cheapest, but more importantly now, let's actually see how it's performed and what this fund is made up of. So at a high level on this page, you will see the annual returns over the past 5 years. Now, you'll see some very big numbers here, and this fund has actually gained a huge amount of popularity over the last few years, as you can imagine, because everyone wants some massive returns. Now, how has this fund managed to get those returns? Well, you'll see this one's kind of heavily invested in kind of technology and e-commerce, and of course was boosted massively if we look over what happened in 2020. So I'll briefly just go over to the charts and performance page. I will note as well, I think the Hargreaves Lansdown website is very easy to use, and by the way, you can access all of this without an account. I'm not even logged in at the moment, so this is all publicly available. So One thing to note, of course, it's really, really nice to see massive performance over the last 5 years. But as we know, none of the past performance means anything to do with what could happen in the future. And I know people say that a lot, but genuinely, this chart looks amazing. But if you buy it up here in the top right today, who knows what's going to happen? It could just do the opposite. So just bear that in mind. What I'll do, and one thing you can do on the Hargreaves Lansdown website, because this chart doesn't necessarily mean anything unless we compare it to the market. So I'm going to choose the index, and of course everyone's favorite, the S&P 500. And the reason I choose that is because it's kind of the gold standard of growth over the long term. That blue line I've just plotted there is the S&P 500, and you can see this fund has massively outperformed the S&P 500, even if you take into account those relatively small fees of 0.3%. So of course it's not necessarily performed massively well over the most recent months if we just take a look at these spikes up here, but pretty much since early 2018 it's outperformed that chart, and although it does mirror the S&P 500, it's maintained its growth pretty nicely. And if we just scroll down here as I've just done, we can see that rather than looking at the chart, we can look at some raw numbers. Now, interestingly though, you will see most recently, for example, the fund's performance again has been pretty good against the platform. But if we go to 2018, 2019, if you were invested then, you wouldn't have actually outperformed the S&P 500, as you can see here. The S&P 500 would have outperformed the fund twice over. But certainly for very long-term holders in this fund, you've had some really, really nice results. You'll have to let me know in the comments section if you've held the Baillie Gifford fund for 5 years. That would be pretty impressive. As we know, the S&P 500 here has gained over 100%, but this fund's 350%. I bet you would have sold out before, but let me know if you haven't. Send me some proof. I'd love to see. Let's just quickly go also at having a look inside what the fund is invested in. I think it's always interesting. So on the main page here, and we can see where the money is split and where the weightings are of this fund. So again, if you want to take the example of saying if you had £100 invested in this fund, here's how it will be split up. So for example, the biggest holding in this fund, I think it was Tesla at one point, if I'm not mistaken. I might be mistaken with that one, but now it's Shopify. So that's that online e-commerce store. That's the kind of platform that if you were starting your own business up today, you could literally create a website and create an e-commerce store for your own business. So that has absolutely gone through the roof recently. Moderna, no surprise there with what happened in 2020. Trade Desk, Roku, online streaming, Wayfair, again, online business. Amazon, no surprise there. Tesla, of course, has had an absolute crazy run over the past few years. And then companies like Twilio and Zoom, and then Netflix. So some amazing companies on there which have shown some huge growth. Breaking that down by sector, we're not really surprised to see the bulk of this fund is invested in that technology and software company sector. I don't think that's going to change anytime soon, really, where the growth's going to come from. But who knows? That's the excitement of the stock market. And no surprise here with the top 10 countries, it's an American-based fund because that's where all the big companies are based. So you've got mainly US, a little bit of Canada, and then of course cash and equivalents. And then just over on that side, you've got minimum investment of £100, or you can put £25 a month into this one. It is an accumulation fund, as I mentioned before, and it's £7.5 billion worth of money invested. So quite an interesting one there. Again, you'd have to do all of your own research and figure out if you invested in this one today, what would the growth be like? Because it is heavily invested in those sectors, and you'd have to wait whether you think as an investor that that's where the next set of growth is going to come from. Just because it's grown for the last 5 years absolutely means nothing for the future, but certainly worth having a look. Okay, so on to the next one. So this is one of Hargreaves Lansdown own funds. This is the Hargreaves Lansdown Select Global Growth Shares, Class A accumulation. So again, it's an accumulating fund, so there's no payouts in this one. There'll be no income produced from it. Anything they make will be reinvested into the fund. Again, it's free to get into. You can see that there would be an initial charge, but Hargreaves Lansdown very kindly off their own back have decided that it's a 0% fund to get into. Also, you can see our ongoing charges, again, really important to pay attention to. So again, around the same mark as the Baillie Gifford fund, 0.6%. So it's definitely in that realms of what you'd expect to pay with a typical managed fund. If we look at performance briefly, one thing you'll notice here, of course, we don't have any stats available for 16 to 17 all the way up to 2019 because the fund didn't exist. So as a relatively new fund, it's only been going for a couple of years. So again, whether that actually means anything for the future, it's hard to tell, but do be aware that often funds live and die and they get merged, liquidated, etc., depending on their performance, often because the bad performing funds people like to get rid of. So just one thing to be aware of. So let's have a look how this fund has performed and what it holds. So let's firstly go again to charts and performance. Now we've only got a couple of years of data here, so I suspect there won't be a huge amount of divergence here. So let's add in again our S&P 500. Add this to the chart. So there you can see this fund has closely mirrored the benchmark of the S&P 500, but to be fair to it, there has been an outperformance there, especially since 2020, which is pretty good. So if we scroll down to see what those numbers actually mean, you can see we've got a gentle beating certainly in the most recent year, but between 2019 and 2020, you had a very, very good return there of nearly 20%. Of course, you'd have to minus your fee from that to see whether that was a good value from your perspective. Pretty interesting. And let's just have a little look as well. So as we can see, no surprises here in terms of the top 10 holdings. Again, still very, very large companies. But of course, if you think about what the S&P 500 is made up of and some of the biggest companies in the world, we're not seeing companies like Apple here. We're not seeing Netflix, Facebook, Google, etc. We've actually got the biggest holding here in Microsoft. But of course, Microsoft's done very, very well historically and has been a great stock to hold over the long term. Other companies that stick out there, you've got Bookings, Booking Holdings. I think they own lots of course, companies like Booking.com. I'm pretty sure there's lots of others as well for that online travel area. And then Adobe, also a great company, who've done very, very well over the last few years. Again, on the left, minimum investment £100. That's a very low entry point, and £25 a month if you wanted to get started invested into this fund. Jump over to sectors. Very similar, I guess, to that Baillie Gifford American fund. No surprise, software and computer services making up the vast majority of the weight of that fund. So if you had £100 invested, over £20 of it would be invested there. Going down, we've got industrial, support services, medical equipment and services. Okay, I guess interesting since 2020. Nearly 10% of the money's there. And then we've got a mix of lots of other things, beverages, media, travel and leisure, etc. And a little bit more of a mix here though with countries. So still weighted heavily to the United States. So that's about, if we think about how that's weighted, that's roughly how the global market is split up, at least for a couple of these. So the United States makes up 60% of the global market, remember. UK makes up about 4%, so that's about right. Of course, we've got no China or Japan, unless I'm mistaken here. No, we've got a bit of Hong Kong, Canada, France and Ireland. Of course, lots of companies are headquartered out of Ireland who sell globally too. That's worth knowing about. Interesting. Could be a good one for you. Do plenty of your own research again. Have a little look at that one. Could be interesting. Okay, next up is Lindsell Trains Global Equity Fund, distributing Class D income. Always a lovely mouthful, you've got to love it. So quick difference on this fund to some of the others we just looked at. This one's an income producing fund, so you will be paid a dividend, and that dividend will be paid, I think on this one, biannually, but we'll find out. We'll find out in a second. So again, this one has no charge to get yourself into. That's free, always nice to see, but nothing in life can be totally free, as we'll see with ongoing charges. So again, no surprise, around that typically managed fund ongoing charge at 0.5%. One thing I haven't noted so far is just do remember that these ongoing charges are just for the fund alone. With Hargreaves Lansdown, there is an account fee of 0.45%. So you will need to add that 0.45% to that 0.5% to get your overall account fee. So that will get you, of course, 0.95% there. So it's nearly a whole percent taken off. So just do be aware of that. Do be aware of that one. So if we scroll down, we can see it's a big old beast of a fund, this one, with nearly £9 billion invested, as I suspected as well. So historically, it's yielded around 1.1%. So it's by no means a lot of money. I mean, if you had millions, that could certainly pay for your living costs, so you'd be okay there. But that's paid biannually. And of course, it goes ex-dividend on the 1st of January, which means if you owned a stock on the 1st of January in this fund, you would then be paid it a month later, which is always nice. Let's jump over to the charts first. Make sure we do everything in the correct order. So looks like a healthy line, but the question is, has it beaten the market? And the reason I always do this is, of course, if you invest in passive index funds without having to pick and choose your stocks, then of course it's going to cost you less. So, some interesting results on this one. And again, past performance doesn't dictate future returns, as we've said multiple times before. But what's quite interesting here is you've seen, so around that 2019 mark, this fund was, outperforming quite nicely by kind of 10%, 20% or so. Pandemic hits and then it's outperformed slightly, but then in recent days, it's actually underperformed. So we've got a bit of a gap there. And I guess as with all things, timing the market is much better than timing the market. So if you were invested long term, it wouldn't be too bad for you. And again, let's go down some of these figures. Interestingly, okay, so over 5 years, the S&P 500 would have outbeat your investment. So just something to be considerate of. But of course, if you want to pick and choose some other years where the fund may have actually beat it, you won't find that in this graph. Certainly if we look at those cumulative performances, but we will find a little bit if we go back to 2018 to 2019 there. You would have beat the market twice over. But of course, holding that on to the most recent year, you would have lost all of that gain. So that's an interesting one. And I think that highlights something I was going to mention later of, although you're paying hefty charges for funds to be actively managed, there is nothing to say that your actively managed fund should outperform the market. And of course, quite often they don't. Quick look at what this fund holds, because I'll be interested. Okay, that's interesting. So we've got a bit more based in the UK here. So Diageo, the beverage producer, makes up 8.62%. That's a big chunk of this holding. London Stock Exchange Group. You may as well buy the place where you can buy and sell stocks, because everyone loves buying and sell stocks. Heineken, interesting, another drinks producer. So lots of consumer goods in this one. Unilever, again, a huge owner of different brands. I did a video recently talking about the 400 brands of Unilever. Nintendo, PayPal, companies that have done very well. Certainly Disney, PepsiCo, not going anywhere. So some good solid companies on here. And again, it'd be up to you to figure out, are these companies going to provide that growth, and is that growth going to outperform an index? And that's the $1 million question, really. That's the $1 million question that we've got to think about. Interesting in top 10 sectors here. So as I mentioned, because you've got Diageo and Heineken making up two big weights of this one, over 20% of this fund is in beverages. So we need to make the world happy so they go out and start drinking. Or do you drink to be happy? I don't know. One or the other. Media, okay, interesting. Personal care, drugstores, personal goods, leisure goods. So this all really depends on how much people spend on discretionary goods, I guess, doesn't it? How happy people are feeling at the time. Top 10 countries, we should say UK. I was just about to say, because of course Diageo is headquartered in the UK on the London Stock Exchange. So we've got a big weighting here for the UK market. So this fund will is typically aimed at someone from the UK to buy it from the UK. Again, that's a big bet on the UK market. But again, as I've said previously, the income from the UK market on the stock exchange actually comes from outside the UK. 70% of the income of the FTSE 100 comes from outside the UK. So it's one thing to note. It's very much a global market. Okay. So finally, we'll move on to our last fund. So I thought I'd throw in here, this is not an actively managed fund, this is a passive fund. So this is pretty much a mimic of the S&P 500. So this is as close as you can get to the index fund of the S&P 500. It's not called the S&P 500 fund, because I think you have to use a license if you call that name. But I think it actually tracks the what FTSE call the market in the US. So it actually owns over 600 stocks from what I remember, but we'll go through that in a second. So again, it's a Class C accumulation fund. It's on their wealth shortlist. So again, you're not going to get an income from this, but you will earn money over time with that capital appreciation. Zero cost to get yourself involved, which is always nice. And of course, one thing you'll notice here is a very low net ongoing charge. Why? Because it's not actively managed. They're not trying to beat the market. They're buying the market as it stands and they're weighting it according to how big the company is. So for example, the top one we should see is Apple, Microsoft, Google, etc. But we'll check that in a moment. So 0.06, that's really nice and low. So you add that on top of your account charge and you've got 0.51 if my maths is correct there. So that's a nice low charge. So over time that adds up. Just be aware of that one. I'm going to quickly jump over to performance. I know you can see those blue numbers there, which is always nice. But let me just jump into that chart because it's always nice as a visual learner. So in theory then, if I compare this to the S&P 500, this should be very, very close because it's mimicking that market. There we go. Look at that. Those lines are virtually indistinguishable, which is good. If you are running an index fund, you would hope that it actually matches the index. Otherwise, you'll be doing things wrong. So that's really, really positive to see. So you've got a really nice low-cost index fund. So, I didn't mention actually, I do own this one. Makes up a good chunk of my portfolio because I do want most of my portfolio to just be a passive track of the market and to have low fees too. So yeah, look, no surprises here, guys. This pretty much matches the performance over the years, give or take. It's pretty much identical, so that's great. Okay, excellent. Let's again just quickly go down. We won't be surprised about this one. You'll see it's a big old fund there. 608 holdings, as I suspected. Big old fund there of over £5 billion under management. And yeah, holdings here, as you can see, pretty much mimic the largest companies in the world, to no surprise at all. So the largest company in the world is Apple by market cap. Therefore, the largest weighting of your money invested in this would go to Apple, if that makes sense. So £100 investment, you'd produce £5.72p into Apple effectively. So yeah, look, no surprises there, guys, all based on the largest companies in the world. And of course, that mimics exactly how the weighted of the sectors is actually split up, which is quite interesting. Of course, you've got technology leading the charge globally, but is it going to be that way for the next few years? Who knows? Big weighting there with the States. Anything exciting here? You do get a bit of REIT here, actually, which is quite interesting. But other than that, it's pretty much heavily concentrated in the US. No surprises. So yeah, do plenty of your own research on this one. There's lots of information on this Hargreaves Lansdown website, to be fair. And again, like I said before, you don't actually need an account to see all of this. This is all open to you. Always make sure you go through that key investor information document. If you go into the key features and documents, which I'm trying to open up, but the computer's being really slow, which hopefully will actually open up here. Here we are, you've got your KID document. It's a legal requirement, so make sure you fully understand what you're getting yourself involved. Anyway, I hope you found the video really useful. I thought I'd just pick a few different funds. There's loads of funds on the Hargreaves Lansdown website, which have been some of their most popular, but I would just pick a few, try and go through and help you understand my kind of thought process, very heavily looking at those fees, of course, which is really, really important, looking at what they hold. And then from that position, you've got to really work out the $1 million question of, do you think that fund will beat the market? And I'm happy to kind of speculate on a few different funds. I'm not pure index fund investor. I do have individual stocks and shares, but make sure when you're choosing your funds and choosing your investments that it really matches your investment profile and your goals and requirements. If you don't want to spend a second more worrying about investments, and of course, low-cost index funds are the way to go. But if you'd like to speculate a little bit more and get more actively involved, then certainly actively managed funds are a good way of doing that. And they could make up a small part of your portfolio. Anyway, let me know in the comments section if any funds like this you've invested in. I'd be keen to know how long you've held them for and if you've made any decent money and decent returns from this. Drop me a like if you found the video useful, subscribe for more, and I'll see you all in the next one.